I'll request you can, if you can all visit the expo area and do join us for lunch after this. But before that, we have a important presentation by Mr. Siddharth Agarwal, founder and MD of Mobicule Technologies. So can we have Mr. Siddharth Agarwal on stage, please? A huge round of applause for him.
So hi, am I audible? Yeah. Hi, good afternoon, everybody. I think unfortunately the presentation is placed between the entire day and lunch. So I will keep it brief, not try to obviously push a lot of numbers out. There has been a lot of this. And fortunately, the discussion that happened before this particular presentation, I will pick it up from there. So the theme, I would definitely not go into too much details about how the industry is moving. I may not be the right person probably to comment on that. But I think couple of days ago there was a interesting quote by Mr. Uday Kotak from Kotak Mahindra Bank. He said it's very important to have return of capital. So that's what I will majorly focus on in the next 5, 10, 15 minutes that we'll go through. I think everybody has spoken around, giving capital away and return on capital. There is a very minute difference, it's on and off. So return of capital means you have given the capital and you want the capital back. Everybody has so far focused on ensuring that you get the customer onboarded and you give him capital. The larger problem which will start happening, not really a problem, but something which if it not attended correctly would be return of capital. So much of loans that are going out, how effectively and how efficiently we will be able to get those, get that capital back. If you look at the entire industry, the way it has moved, at least on the banking or the financial services or financial institution fronts, which includes the NBFCs, PSU banks or the large banks, it has been majorly the early days, maybe the 2000 odd time, it was majorly the focus was around ensuring that you have the right core banking system. That's where it started. Then it kind of moved on to see if there are better ways to get the customer onboarded. So CRMs kind of graduated from that point of time. Then it moved to the cycle of having the right loan origination system, which means once the customer is in, how fast, quickly and how in the best fashion you could give a loan to the customer. So that's where the loan origination systems started fanning. And then if I have to draw an analogy, it's basically your head, your body, and I think return of capital is the tail of this whole thing. I think there is a very common saying that "Hathi nikal gaya, pooch atak gayi," right? That's a very common saying that keeps coming in. So return of capital is that part of the elephant, which is very difficult. It's most of the times ignored, and it's very difficult to get hold and get it right. So I will spend some time just sharing. So I think this we all know how India is lending. It's a great story. There are numbers in trillions of dollars and there are lakhs of crores that are getting, whether it is a gold loan, whether it is a micro loan, whether it is a car loan, any wheels loan, home loans are picking up in a big way. So obviously all the traditional lending has moved at a very frantic pace, be COVID, be post-COVID, be pre-COVID, whatever that is. It has moved in a very, very, in a very, very critical and important phase, and it will only go up. I think we've heard enough since the morning how things are changing, and it will only go up. There is no way this is going to go down with the kind of consumer power that is there. Though what is changing is the consumer preference. So earlier days when it was very common, if we I think speak to our our parents, they would have, if they want a home loan, they would go to an SBI or a Bank of India branch, sit there for half a day just to understand what papers have to be given, then there will be multiple visits to get the loan. From there, the consumer preference now is a quick loan, right? That's where all the digital and the complete intelligence that is getting built into the software. There has been huge growth in retail lending. I think needless to say that in terms of retail, I think it is almost 37%. I don't have exact numbers, but retail is contributing in a big way and it will continue to grow faster. There is obviously, we just heard NBFCs now have ease of capital because they are co-lending with the larger banks. So there is a huge amount of capital or credit that is available. Needless to say, all of us, I don't know when is the last time you signed a loan agreement with somebody. It is all digital now. It comes on your phone, you do video KYC and you get a loan or you get onboarded. So increase in the digital preferences or the platforms that are around, this has eased the entire lending, the way the lending happens. And the last part of it, which little bit I can pick up from the last discussion, was the co-lending. There are non-traditional ways of lending that has come to fore. So people are lending in a very innovative and a very advanced way, where two banks are collaborating, or there is a digitally smart co-lending company which goes out, gets customers, and finally you have a PSU bank who's finally giving the loan to you. So it's a very interesting phase on how the entire landscape on the lending front is changing. Now, moving on from there, this obviously brings up a lot of challenges into the system. Obviously, the more you do, the faster the engine runs, the more challenges it will bring up. All these challenges of the right asset quality, so which means what assets you have and how good those assets are, is now being brought to fore. With the increased and the stupendous amount of lending that is happening, asset quality is bound to degrade. It is a natural phenomena. It is not something that anybody needs to predict. It's a natural phenomena that is going to happen. Banks, NBFCs, PSU banks are now struggling with how to manage their capital adequacy ratios, how to ensure that they are well funded to ensure whatever is written off, it's not hurting their overall balance sheets. There is a huge surge in cyber fraud. I think in the last week there was, there was a good amount of noise around. In fact, I got a message from Tata Power saying that my electricity is going to be cut off at 11 if I don't pay. For a second, even I went and was about to click it. So the amount of cyber frauds has gone up, which brings further challenges for lending institutions because people are getting hold of databases, reaching out to customers. Customers are not available, are not aware how to handle this. So all these challenges require a very tight, end-to-end automation or processes to be put into place. The challenge is, I think what we have done well is we have built in intelligence, we have built in automation. We are now talking about RPA, which is automating the processes, which has been probably done well, but within silos. The next leg is going to be bringing all of this together under one umbrella, under a single platform, so that you have complete end-to-end control and there are no leak points within the system at any point of this. This cannot be obviously solved without the right people and the right technology. I think enough has been said, enough will be said, and enough will continue to be said about technology, which is obviously our core business as well. But without the right people and the right technology, managing this huge growth is going to be the most important or the tricky part of the challenge. I think it's becoming increasingly difficult to find people with the right background, right technology set, with whatever skilling and that you do. So moving on from the challenges, I'll deep dive a little bit more on the base theme, which is return of capital. Now, how will people, processes, technology help you do that? So what you have done is you have got a very good core banking system, stable, scalable, taking care of everything that is possible. You've got an amazing CRM in place. I think the BFSI sector is under a huge adoption of latest CRM technologies and platforms, which is ensuring that the customer that comes in, and if there is a repeatability that has to be done, the CRMs are taking care of it, and there is a huge surge which is happening. That's well taken care of. Majority of the banks, NBFCs, are in the cycle of deploying their loan originations and the loan management systems to ensure that the customer is tended the loan in a very quick basis, and once the loan is given, he is managed little bit properly, so that there are no challenges in terms of notifications or payments or things like that. So these parts again are pretty well well placed. They are well oiled at this point of time. I think there is enough focus where people have ensured that relevant softwares, relevant people, relevant technologies are taken care of, and it's now moves to a point where you need to ensure that all of these cross-share data. We have heard about data coming from outside. Maybe your credit bureaus are giving you data about how the customer is performing at a different organization. But it's equally important that the data between these and the real value of the customer gets derived based on the cycle that he goes through. Now, this is where people, process, technologies will help us, align this completely. Uh, uh, each place, whether it is people, where there is artificial intelligence, which is now taking over, machine learning is getting inside it. So the people part is being aided by technology, where you will have less dependency on people. The process part also, again, technology started playing a role. You have, I think, at least in the banking and the insurance and the NBFCs, the entire sector, RPA is moving very well, where you can do a lot of these jobs which were happening as a manual thing is now being taken care by robots or robotic software which takes care of this. So it is pretty much evident, and it is pretty much moving in that direction. The critical piece in it is each has to talk to each other and ensure that the end-to-end is taken care of. I'll quickly move on. This is where we kind of think, and we should be able to help a lot of banks, NBFCs or financial institution to get the return of capital. So वो जो हाथी की पूंछ जो अटकी हुई है, we need to ensure that we get that elephant out. When it means end to end, it has to be end to end, which means right from the point where the customer got onboarded to him being offered a loan. So at the point where the customer got onboarded, getting the right information, the right addresses, the right contact numbers, to the point that once the loan is given to him, the cycles in which he is paying and the registrations into e-NACHs and ECSs are right. The last part of it becomes is that how you are going to recover if he defaults, okay, or not let him default. These are the two parts which this entire return of capital depends on. We club it down into three themes. We say the return of capital, there are three parts to it. One is effective monitoring, which means you keep monitoring your customers to ensure that they don't default, or if they are on the verge of default, you provide the necessary help or necessary service or the necessary pipe. Maybe it is the restructuring of the account, maybe ensuring giving him an additional top up, whatever is the best way you could do that. That's the monitoring part of it. The second part of it is collection. So we talk about digital platforms, we talk about a lot of stuff. We still have a huge amount of rural India which is still a big player in the lending space, or a big contributor in the lending space. I was just chatting with somebody, I think almost we were talking about video KYC the other day. Almost I think 40% people from the rural areas still do not have access to video KYC because it requires it to be online. It requires a decent smartphone to ensure that you can do video KYC. So that's the amount of percentage which is still out of this entire digitalization, which is UPI definitely has increased it in a big way, but there is a huge amount of these advanced technologies which we are not able to get to that population. So you have a rural India which still probably pays in cash because they have small amounts. The farmers, the people who take crop loans, who take tractors, they still pay a good amount in cash even after all the digital channels being available. Probably because it is cash in, cash out for them because they receive money that way, so they pull money out that way. So there is a huge amount of cash that needs to be handled when it comes to return of capital. Have we really thought how we are going to handle it? Because there is again a good amount of fraud that happens. This is where proper technology, proper collection of cash as well as whatever mechanism you are going to recover the money needs to be taken care of. Of late, in the last 3-4 years, there has been an interesting, while UPI is being talked about, there is an Aadhaar-enabled payment system, AEPS, which allows you to just put your fingerprint through a mobile device, just put a fingerprint and withdraw money from your bank account. That has been a huge success as well, where rural customers, they don't have ways and means, they just put their anguta over there and you recover the money from their bank account. So that comes on the collection part of it. So monitoring, collection. The last part, which is unfortunately if the customer defaults, he doesn't have the wherewithal to pay you, comes the recovery part of it, where if it is an asset-based recovery, you go and repossess his house, you go and repossess the vehicle, you repossess his tractor, you repossess his bike or whatever. So it's obviously an emotional situation when you are hitting the customer. There, right technology, right methods and right processes will go a long way in. It's a customer which is in distress. Bulk of the customers don't default because they want to default. Bulk of the customers default out of their financial situations or things that have not gone their way. So those customers need to be dealt in the right fashion, and that is where putting a right process, a right technology will help ensure that this is equally important in your customer experience cycle. We always forget that getting the customer is one part, maintaining it is another. When he is leaving you or he is in not right shape, the way you handle him, he will come back, right? He will come back out of his financial mess or whatever he is into. The way you handle him is equally important for him to be loyal to you when he has a need again or he is in the blue at that point of time. So how you deal with him in the red is going to be equally important, how he is going to treat you when he is in the blue. So this is where I think the entire return of capital story begins, and I'm glad a lot of people in the industry have now started talking about return of capital. It is not just about giving loans, it is about ensuring that you get the money back and you get the money back in the right fashion rather and the most effective way of doing it. I'll not spend too much time, this is what we are as we stand. That's a product portfolio that we do. So we basically deal at two ends of the cycle in this industry. One is where you onboard customers. So we ensure that right way you can onboard customers, and then we come at the tail part of it. We love the tail. So we come at the tail part of it when you want to really collect the money back, right? You have given the money and you want to collect the money back. That's where we have a path-breaking platform called mCollect, which is being used by major banks and financial institutions. So I would like to sign off. I don't have much beyond this. Unless there are any questions, I'll be happy to take. Thank you. Thank you very much for being patient before going for lunch.